What's up, everybody? It's Chris from Monte coming in to talk about Doge. Today, I want to go over Jim Cramer's most recent claim. He came out and said that July 13th is going to be the bottom of the market. I'm like, honestly, what is this guy talking about? He never makes any sense. If you don't know who Jim Cramer is, he's on TV and he's always making stock predictions. And they're just always completely wrong. It's always the opposite of what he says. So if he's saying that, oh, July 13th is the bottom of the market, then unfortunately, I'm sorry, but it's just starting. We're not even close to the bottom. So that's what we have to look forward to. But the goal of today's video is to go over some of the macroeconomics that we've been talking about on my channel. So the CPIs, GDPs, recession alerts, and we also have inverse yield curves. We've been talking about a ton. So today I'd like to wrap some of that stuff up together and try and paint a bigger picture of where we're at in the market now, so we don't have to listen to all this crap on the news that's it's just there for entertainment, in my opinion. So that's the goal today. We'll also check out some charts. We'll look at SPY and Doge and see if 6-cent Doge is good. So that's the goal, and hopefully we can accomplish it. As always, this is not financial advice, and please remember to like, comment, and subscribe. I got like 3 or 4 subscribers from my last video, and honestly, that's huge. So I just want to say thank you to everybody who's subscribed. All right, let's hop in. Cool. So this is the guy right here, Jim Cramer. Take a screenshot of that and make sure you listen to nothing he says. But seriously though, he's wrong more times than he's right. So what he came out and said was July 13th will be the market bottom. He said that today. I don't know. I think he's oblivious to everything. It just doesn't make any sense to me. And here's why. So there's a ton of reasons why. We'll start out with CPI. So this is an indicator that tells you how much inflation is right now, and it was 8.6% in May, which is the highest it's been in over 40 years, so that's crazy. Right now they're predicting, so July 13th, tomorrow, they're going to come out and tell us the new report for CPI of June, and they're expecting 8.8%, so even higher than last month. So that would be even larger time period since we've seen such high inflation. So it's definitely, it's not great, and it looks like it's getting worse. Granted by a little bit, but still it's getting worse, and that tells me that we're not just going to tackle inflation in a month. Like it's here to stay for a little while, guys. I'm sorry, but it is. So at least that's how I see it. So that stinks. What else stinks? We have interest rate hikes, so that's kind of how you tackle inflation. Right now, we're at around 1.5% interest rate. If you look back to 2008, we were at a 4.5% high of interest rate then. So right now, we're 33% of the way. We still have some room to go. And if you guys didn't know, you add an interest rate hike once a month to try and control inflation without throwing us in a recession, even though that kind of feels inevitable at this point. So, yeah, they're going to meet July 26th and 27th, and that's when they're going to actually increase interest rates again, and they're expecting another 0.75. And then let's take a peek at GDP. So this just tells you how much the economy is expanding or contracting, and right now, so this is quarterly. The first quarter was negative, and now this is the second quarter. The estimate is negative as well. If both quarters in a row are negative, that indicates recession. We'll get this information July 28th, so that's when that'll come out. But as of now, it looks like we're heading into a recession. So that's another thing. We have a record inflation. We're not even close to finishing or getting to the peak of interest rate hikes. We also have 2 negative GDPs coming up. What else do we have? We had 2 inverse yield curves happen this year. They indicate recessions are coming, and we had 2 of them this year. So that's just crazy as well. And this is just when you make more money in the short term than long term in the Treasury. So that's just a quick charting thing that actually indicates a recession. So that's another thing that happened. And then if you look here, the next stop for me, so we already wiped out the market. We wiped out the crypto market. I don't think the market's done yet, though. So we wiped out the market, crypto market, and now I think we're headed into real estate. Because if you look here, it's a cool little meme. The stocks got wiped out, cryptocurrencies got wrecked. We saw that, and now real estate. So I say that because we're finally starting to see mortgage interest rate hikes. It's been a while since they've been increased. They're actually like all-time low, which makes people want to buy a ton of houses. Plus, a lot of big institutions were going and buying houses. That's why during the pandemic, the housing market went crazy, because not only were people, average people like me and you, buying houses, but big institutions were just scooping up houses now because they really fight off inflation. They were like, I don't know, a year ahead of the game. So yeah, so it's just a ton of crazy stuff going on right now. And for some reason, Jim Cramer thinks tomorrow's going to be the bottom. All right, what are your thoughts? Do you guys think that? I know I'm joking about it, but I just honestly think that it can't be any way. So that's what I'm looking at. And now let's check out the stock market. We'll look at SPY. And if you look here, this is on the daily, so we'll go to weekly. If you look here, the high was 476. If we had a normal pullback for a recession, that would put us around $320 SPY, so all the way down here. Right now we're sitting around 380. So we still have some room to go down, in my opinion, and these are some of the indicators I've been putting on for you guys to look at. So I still think a lot of money's going to come out, especially when they start saying, hey, we're in a recession for sure. So money's going to be pulled out of there, in my opinion. And now let's look at Bitcoin. Bitcoin's ripping down. I've been telling you guys in the past that I see Bitcoin coming back down. I see Doge coming back down. And that's what we're seeing right now. Bitcoin threw up an ABCD pattern, got rejected. It's on its way down now. It's going to try the 17.6 again, I think. And I really hope it doesn't go below that, because this is uncharted territory, and that can over leverage people and cause them to sell immediately, further pushing the price down. So I hope that doesn't happen, but looks like we're on our way down there. Now let's check out Doge, because I love Doge. Like I was saying, when we were ripping up, I thought we were going to come back down. It just makes sense to me with everything going on in the world. Can't really expect a bull run when all those things I just listed. But yeah, so we're coming back down. I don't know if we'll try this 4.9 again, but it's definitely possible. I think anything around the 6-cent range or a little below is really honestly a good deal, since we're down 90 to 95% since all-time highs, especially if you believe in the coin. I believe in Doge, especially because Elon backs it, and I kind of look at Doge as like $30 Tesla stock, to be completely honest. I don't know if it'll perform like that, but that's just what I keep telling myself. So yeah, so that's everything that I see going on, guys. I really hope you enjoyed. Please let me know how I could be better, and remember to please like, comment, and subscribe. Thanks so much for watching, everybody, and I can't wait to see you in the next one.